Weed kills. How investing in cannabis almost took down Scotts Miracle-Gro. The gardening giant bet $1.7 billion on lighting, nutrients, and other cultivation tools and lost. But CEO Jim Hagedorn and his son Chris are plotting a comeback. Here's how they plan to smoke the competition. It's a beautiful, chilly November day in Las Vegas, and Jim Hagedorn, the CEO, president, and chairman of Ohio-based lawn care giant Scotts Miracle-Gro, pissed off. After nearly a decade of making a series of audacious bets on the legal cannabis industry, Scotts spent $1.7 billion building pot-focused subsidiary Hawthorne Gardening Company and acquiring grow light manufacturers, hydroponic supply outfits, plant nutrient makers, and other cannabis cultivation supply companies. He admits the venture has been an abject failure. Inside his company's booth at MJ Biz, the largest annual cannabis industry expo held at the Las Vegas Convention Center, Hagedorn throws a booklet of rolling papers across the table to make a point. This is what our equity is worth, the 68-year-old Hagedorn says, referring to Hawthorne, which is run by his 39-year-old son, Chris. When we started making acquisitions in the cannabis industry, it felt righteous as shit, said the notoriously foul-mouthed former F-16 fighter pilot who named his private jet F-bomb. Back in 2015, when only 4 states, Alaska, Colorado, Oregon, and Washington, had legalized recreational marijuana, Hawthorne started spending hundreds of millions of dollars acquiring companies like General Hydroponics for $120 million, a Santa Rosa-based indoor gardening supply company, to get into the marijuana industry's ancillary market. The move helped the Hagedorns grab glossy magazine headlines, and Scott's stock price started to rise from the mid-50 range to above $60 a share. In 2021, the company agreed to acquire a more cannabis-focused companies like Lux Lighting, purchased for $213 million, and a deal closed in 2022. A grow light company started by the founders of respected weed brand Jungle Boys and brokered a $150 million convertible debt deal with Canadian cannabis investment company RIV Capital. Scott's stock bloomed to a robust $244. But thanks to the marijuana industry's prolonged recession driven by the oversupply of cannabis, the crashing wholesale price per pound of weed, a punitive federal tax code applied to cannabis companies, a lack of movement at the federal level to legalize marijuana, and sales at Scotts dropping from $4.9 billion in 2021 to $3.5 billion in 2023, Scotts' share price cratered 75% from its 2022 to 2023 and posted a net loss of $48 million for the year. Had to terminate 1,000 employees from its 1,300-person staff and shuttered Lux Lighting after disposing of $200 million worth of unsold inventory in a landfill, which we covered here on High at 9 News. The company is now worth zero or less than zero, says Hagedorn or Hagedorn. I can't pronounce your name, but I like what you're doing.
Hagedorn.
Look, says Hagedorn, wearing a National Rifle Association hat emblazoned with a Don't Tread on Me logo, pot almost took us down. So why is the billionaire family in Vegas in the middle of a cannabis conference? He lifts both fists, extends his middle finger in the air triumphantly. I mostly want to say F you to the industry, he says. There are people, even good friends of ours, who made fun of Scotts for our investment in pot, how we effed it all up and are disrespectful about it. And he isn't just paranoid about feeling disrespected. Bring up Scotts in front of cannabis investors and they'll laugh and hurl insults, like how the Hagedorns are fucking morons and arrogant idiots for blowing through $1.7 billion. One New York investor said Scotts pulled off one of the worst deals in the history of cannabis in 2022 when RIV, at the behest of the Hagedorns, bought New York-based licensed cannabis cultivator and dispensary operator Etain for $247 million. So the father and son team are smart, and they're humble enough to roll with the abuse. During the November 2023 earnings call, he said, "You can throw shit at us, we deserve it." Besides, they have a plan to spin out Hawthorne from Scotts, an announcement that helped the stock jump 8% in one day. Ultimately, the goal is to create the Procter & Gamble of marijuana, Hagedorn said, with a whiff of irony by selling Hawthorne to a publicly traded cannabis company like Curaleaf, Trulieve, Green Thumb Industries, or Verano. None of these companies commented to Forbes about the potential deal. At the height of 2021, Hawthorne generated $1.4 billion in sales, posting $164 million in profit. But in 2023, the unit generated $454 million in sales and posted $48 million in loss. And most of Scott's $2.6 billion in debt belongs to Hawthorne. Hagedorn says that there's one rule: Hawthorne cannot stay inside of Scotts. Or as he puts it, Hawthorne and Chris need to get out of Dad's basement. It's not that Hawthorne, which owns more than 20 companies that make everything a farmer needs to grow designer indoor marijuana from lighting to nutrients, doesn't have value. Matt Garth, Scotts CFO, concedes that Hawthorne is a detractor to Scotts' overall valuation, but looks forward to a future where there's a lot more value. The younger Hagdorn adds that Hawthorne's crown jewel is a 40,000 square foot research and development facility in Kalowa, British Columbia, which was built in partnership with a licensed Canadian cannabis company. Completed in 2021, the facility is where Hawthorne tests its products against competitors to see how they best increase harvest yield, THC potency, and consistency. Hawthorne has two other R&D facilities in the U.S., one in Oregon and one in Ohio, that test equipment on hemp plants. Since the facility is federally illegal in the U.S. and Scotts is a publicly traded firm, the company must run R&D on weed's federally legal cousin hemp. Chris refers to Hawthorne's R&D facilities as earth-changing and an asset that could be combined with the cannabis company to create a fully vertical integrated cannabis corporation that makes everything from grow lights to weed to retail stores. So I've got another 3 paragraphs, and I'm going to wrap it up like Dave Chappelle says with the wrap it up box. But what I really want to talk about here is, did they make a mistake, or have they taken a medium to long-term view, and it's time to buy the dip? Because broadly, the industry has been battered for more than a minute, and valuations are down. I'd like to hear what you viewers think in our chat on YouTube, as well as what the other esteemed panelists here on High at 9 News have to think about Hawthorne. Thumbs up, thumbs sideways, thighs down. What do you guys think?
I think they're going to sell it off and then buy it back at the low.
Oh, they're going to do the Isaac Tigrit move. You guys know who Isaac Tigrit is, right?
What is that?
Isaac Tigrit is.
There's a few things here.
Go ahead.
One, I just want to get out some house cleaning things. They lost 2.6 billion with a B.
With a B, baby.
Yeah, with a B.
With a B.
That's right.
1.7 is what they've deployed.
Oh, they're just in debt 2.6 billion total. Okay, so 1.7 billion dollars.
Mm-hmm.
Okay, that was the first thing. That was just like, I just want to make that clear for the readers. That's with a B, billion.
Yep.
And they're about to go under after spending nearly $2 billion. Okay, but we'll just move forward. I love, and I need to figure out how to do this myself, but because this is awesome, how the Jungle Boys got referred to as respected weed brand Jungle Boys. Shout out to the Jungle Boys. I don't know how you get to the level when regular journalists say like your shit is respected in the game like that. But hey, man, that's dope. I got to get on that line. And then lastly, their crown jewel is a facility in Canada. Like, come on. Are you serious?
It's a Midsworld.
You're testing against, they said that's where we're going to test the best against the best. That's like, what are you having like people, like the slowest people in the world race against each other? Like, what do you mean? Like testing in Canada, that can't be your crown jewel. That had to have been like a misprint or something. That's all I got to say.
I think they're doing that for the tax benefits.
I would say that, yeah.
I think they're doing that for the tax benefits.
This is a juicy story, though, man. There's a lot of stuff, like little things like you pointed out, Luke. There's a lot of little things, little shout-outs in there that the common reader would not think twice about. But, yeah, there's a lot of stuff in this article. But me and being in the financial industry at one point and seeing like a lot of this stuff come through financial periodicals, which Forbes can kind of be named that these days. They're more of a pay-to-play outlet. But I would say, losing $2 billion for Scotts Miracle-Gro, like they're averaging between $3 and $4 billion in profit every single quarter. That is not a big amount for them, but it is good to have that off the books right now while we are in a recession. I know they're going to fight the actual meaning of a recession this time again under Joe Biden and try to say that we're not headed towards that again. But it's a good time for them to unwind this asset, watch it tumble some more under some mismanagement by somebody else, and then gobble it right back up when they reschedule, deschedule, or whatever. And when banking comes back in, I guarantee you Scotts Miracle-Gro will be right back there buying Hawthorne and maybe a couple other of the laggers at the time. Watch.
Yeah, I really appreciate what you have to say, Rico, in respect to this article for a couple reasons. First of all, I covered their $200 million disposal of lights a couple weeks ago here on High at Night News. And when I see that article and this article, I can't help but wonder whether they have a little PR person and they're seeding the journalistic ecosystem so that they can set themselves up to be the comeback kid. It seems like they really are living and not embellishing, but relishing in this notion that they've gotten kicked in the cojones. And what are they going to do about it? I think some of their investments, like General Hydroponics in the medium and long term, are going to be great. And I think medium term, that's fantastic. General Hydroponics from Sonoma County, California. Shout out to Larry. You do you. I'm so proud of local companies like his. And I think that the part of the challenge that I see is I'm not sure what their total overall strategy is, right? When you have a facility in Canada and you have facilities in the United States and you're buying into a limited license market in New York with Attain Health, what I want to understand is what is the actual focus, right? It can't just be gobble up things left and right to create that arbitrage without having a deep vision for where they want to play in the space. But I also think that this might be a buy the dip opportunity because they do have some assets. And I don't think these guys are dumb at all. And I think they have a very established track record of playing at a very high level. So I can't speak to every single deployment of dollars that they decided to do, but I don't think they're down and out. I think they're, like they said in the article, are trying to strip away Hawthorne from being a part of Scotts, and that they've decided that that's better for both of those companies. But I wouldn't bet against these people. And I think that their early entry into cannabis, 2015 in regulated cannabis is pretty early. And that's when they acquired General Hydroponics. And so I think long and medium term, they're going to do just fine, but for deciding to throw $200 million in lights in the trash.
Right. Long story short, they have enough money, they have enough capital on hand to play however they want to play. We have not seen the last of them. I think they're going to unwind this asset, watch the shit tumble, and then they're going to come right back.
Listen, I think too, though, I agree with both of you guys. Let me just start there. But let me say too, though, I think we have seen time and time again in this industry that just because you have a ton of money does not mean you're going to be successful. It doesn't matter how much money you throw into something, you're not throwing it into something that works or that's viable. You know what I'm saying? And I'm not saying that's the case with Hawthorne or with Miracle-Gro or with whatever they got going. I don't know even all of the details of all their investments and where they lost money and what they even have that is viable to make money. But I will say this. You can get a brand or you can get a operator license or extract facility or laboratory, and you can dump tons and tons and tons and tons of money in and just throw your hands up and say, hey, why isn't this working? Oh, it's so hard. The industry's so tough and all these other things, right? If you don't know this industry and you don't have stakeholders that know how to operate within this industry and know the nuances of this, you're not going to make it in this industry on that level. You're coming in when there's people that have already been established in this industry that are, it's like Hawthorne's lane is already filled with a lot of cars, is my point. You know what I'm saying? So if you think you're jumping off the freeway and then you're getting back on the freeway and then you're going to pass up or even catch up to all these cars that have already blocked, it just doesn't really make a lot of sense to me. And I don't think any amount of money thrown into that situation is going to make it successful. But again, I don't know all the details of it. I'm just saying, I'm just merely saying as a word of caution, anyone in this industry, don't think that you can just keep throwing bad money after good and think it's gonna work. If it's not working, listen, there's a reason why it's not working. Analyze that and try to fix that.
I think everybody's pretty much right on this one, Luke. And it has nothing to do with knowing what their plans are or anything like that, because as Yarrow said, getting in 2015, you saw the pop in 2016, 2017, rode that wave up, and then it's been all downhill since then. So, I mean,
I think if they had stayed narrowly focused on nutrients, which, I mean, when I think of Scotts Miracle-Gro, I think of like lawn feeder and stuff like that. And so I think they started off on the right foot. If they had consolidated the nutrient industry, if they had helped move the conversation from sulfate nutrients to biologicals, if they had just stayed in a nutrient lane, I think they'd probably be in a better position now.
Well, we're gonna keep this train rolling. We're gonna go right into a commercial, and we're gonna be right back.